I'm Michael Fox, and this is the Prospector News Podcast. And we are on location at the New Orleans Investment Conference down in Louisiana this week. And I have joining me this time in person, which is nice because we had to do this by Zoom the last time. But I've got Jeff Clark of the Gold Advisor sitting across from me. It's good to see you, Jeff.
It's great to be here, Michael. Thank you. And boy, this is a fun conference so far. I'm enjoying it. It's very productive for me.
Yeah, it's always a fun time down here in New Orleans, and Brian puts on an excellent conference. For those that have never been to it, I highly recommend it in the future. Now, last time we sat down and chatted was right after the silver symposium. So we went, we were talking about silver. We're gonna change gears this time and probably talk more gold, because this has been traditionally a gold show. The interesting thing is when we talked, gold and silver were actually trending on a very nasty downward trend and was approaching the 200-day moving average. And then literally that weekend, boom, there's a war in the Middle East, and now gold is going back towards its all-time highs again in the space of a month. Thoughts?
Gold does always respond to geopolitical conflict. We can document that. There's, dozens of occurrences of that, and gold always responds to that historically. We also know that gold tends to give back some of those gains after the conflict resolves. Now, that assumes, of course, there's nothing else going on, right? But what's interesting, I thought, Michael, was the dollar and gold were rising together here recently. So people shouldn't automatically assume that because the dollar is rising, gold has to go down. That does happen a lot. But there are times, like recently here, where they've both been rising together. Gold is a safe haven. That's very clear. From thousands of years of history, and that's what we're seeing right now.
Yeah, we're recording this on the Friday of the conference, which is November the 3rd. The US dollar did do a reversal today, and gold is still remaining strong and moving upwards. And we're approaching last week's high. When I looked about an hour ago, I haven't looked in the recent, but we're back near that $2,000 level again in gold. And as I say, in the short space of a month. I agree with you. Conflict does, as I often say, the world burns and gold turns.
Right.
But at some point it does give back those gains. But with everything else that's going on, as you've alluded to, I don't see it getting back down close to that 200-day moving average again. I think it's going to settle in somewhere, in around the 1925, 1950 point in my mind. But that's based on Fed, that's based on some of the turmoil in the US elections and general geopolitical issues across the world. What are your thoughts on these things?
Well, you've outlined the factors that can affect gold very clearly, and it does feel different a little bit this time. But if we just look at it factually, the Fed is ending its rate hike cycle. Even if they raise one more time, they're not going to be able to continue that. They may stay higher for longer, but in my opinion, Michael, I think they're raising now so they can lower later, so they can lower rates later. So I think that in 2024, the Fed will be cutting rates, not remaining the same, regardless of what inflation may be doing, because there's too many other white swans and black swans that are circling, right? I actually looked, Michael, back at the last, I think it was 50 years, and I documented all the crises that occurred. And there was one that occurred every 3 years on average, okay? Some kind of crisis every 3 years. And gold responded to those. But when I examined those more closely, I realized that almost half of them were black swans. They weren't things that people were expecting, like the pandemic. Who expected the pandemic to go global? So, I think it could be, everybody talks about the debt, they talk about the dollar, they talk about the Fed. Those are very real things. They do impact gold more in the short term than the long term. But it could easily be something that we're not talking about, that nobody's talking about. It could come out of nowhere And that type of crisis that's unexpected can lead to, igniting a gold and silver for that matter.
Yeah, no doubt about that. And I agree with what you're saying with the Fed. It's I think they are just about run out on the interest rates. And I think when they do their pivot, and I'm not in the camp where I think they're going to be lowering. I think they're just going to leave it alone. And that's going to be the trigger to the pivot. But I think that's going to start to move the gold price back into the positive range and towards new highs.
Yeah, I think that, they're probably going to have to settle on at least not raising rates any further. But let me throw this out at you. Looked at all the Fed rate hike cycles since the 1950s. And on average, the time between the last rate hike and the first rate cut historically is only 5 months. Believe it or not. You can look back, the average is 5 months. Only one was over a year, 13 months. Some were 1 and 2 months, but on average, it's 5 months. So if they're done raising, history says that on average, there's a reasonable chance they'll be lowering rates 5 months later. So, but you know what? I don't count on that as the reason that gold is going to go up. Gold is probably going to respond to that, but there's so many other catalysts circling and potential black swans that I think there are bigger things that are coming on top of just what the Fed does.
I wouldn't disagree with you. I'm finding that, and I've had this discussion with a number of the analysts and people here at the show. I'm finding that we're almost in a two-tier recession. There are people that at the lower end of the income scale that are really suffering right now. Inflation has hit them in the pocketbook hard. And
they're already in a recession. That's your point, right?
They're already in the recession, and they're making decisions on rent or groceries, not whether or not I can buy a latte. And it hasn't hit that I'm going to cut back on the number of lattes and glasses of wine crowd yet. And I think when it starts to bite into that crowd, I think you may be right. That's the point when the Fed may start to make its motion, because then that'll be taking the recession, making it pervasive across the full scale of the economy.
Right. And there's another consideration whenever they do stop, and whether I'm right that they lower next year or you're right that they don't lower next year. In my mind, there are other catalysts like we've been talking about. And another one is money printing. I think they're likely to resume money printing in the middle of a recession when things get bad. And if you're right that there's the upper tier, the second tier gets affected by the recession, I can easily see money printing resume, which of course is bullish for gold.
Yeah, definitely. And I think ultimately that money ends up in the upper tier, but it'll go to the lower tier first to help, I think, in student loans, rent assistance, and programs like that.
Public works, they're known for.
Public works, yeah. And that's one of the things, like, if we were to sidestep into critical metals, I think that this next recession is going to be different than past recessions, because I think a lot of the public works money is going to go into areas of the shift towards a green economy.
Yes.
Given the political appetite towards doing that. And that's going to put pressure on those types of metals beyond just the gold market that we're talking about. So
it's going to put pressure under those metals because there's going to be a lot of demand for those metals, even perhaps in a recession where they're the green agenda is alive and well and could be really ignited in the middle of a recession. That's really something to think about. But if they're throwing money at public works and green energy projects so they can create jobs and all that, that's a demand for these metals, and that is probably just the beginning of what we're going to see in some of these critical metals, including silver.
Yeah, no, I agree. Although at the same time, as we did that little sidestep, as gold goes, typically all the other metals follow. So that's why the that's why we do focus a lot of our conversations and a lot of focus on the gold markets. Now, the gold markets, as we said, they're approaching historic highs yet again, as you know, the war in the Middle East has put a bid under the metal as a safe haven. But this money's not filtering down on a micro level to the, you know, the gold miners, and especially not the people that are explorers or developers. What's going to be the catalyst that's going to, that's going to help those folks out? Because at the end of the day, we're needing more gold, and we're not taking it out of the ground.
Right. The what we're taking out of the ground is decreasing while the demand for gold is increasing. The same is true of silver. But I think, as all of your listeners know, the sentiment in the junior market is just as bad as it's ever been. In fact, one of the themes I had here at the conference was, is this a 100-year opportunity? Because they've sold off so much. As one example, there's a company in our portfolio that has infrastructure on their site that is worth 4 to 5 times more than their current market cap. And that excludes the resource, the gold resource they have, the growing resource they have, all the drilling they've done. That's how cheap some of these things have gotten. And so I actually went back and compared the general mood of the junior market right now to the 1990s, because that was called the nuclear 90s. You remember?
I remember that very well. It was not a fun time to be in the metals markets.
Just like now. And in some instances, it's worse now, arguably, than it was in the 1990s. And then before that, you almost have to go back to the Great Depression. Coming out of the Great Depression, coming out of the nuclear 90s, coming out of the financial crisis in 08, gold and gold stocks soared. So I think we're probably on the cusp of that. I think 2024 could be very exciting. The issue is sentiment. We need sentiment to turn in the junior market, and that will be when Main Street and Wall Street both want to come back into the market. A lot of people have given up. I understand that, but I think, based on history, that gold and gold stocks cycle, and the next cycle is up for these metals and miners.
Yeah, I would agree. As far as the sentiment goes, it's really funny. Like, I hear about the poor market sentiment. I see the low volumes on the TSXV where a lot of these stocks trade, and I have to come to an agreement that, yeah, things look pretty bad. And then I get optimistic when we go to places like the Silver Symposium, where there was 1,000 paid investors.
That's right.
On the floor wanting to talk about silver. Now I'm here at Brian's conference here in New Orleans, and we've got nearly 1,000 at an even higher ticket price, paid investors that are here looking. It says to me that, yeah, the sentiment may not necessarily be positive, but it's shifting that way.
I think so. Like I said, it does feel different. It feels like sentiment could be shifting. Personally, I want to take advantage of the opportunity. I've been, long and strong for a long time, but I'm cleaning up the portfolio. I have cash. I want to, buy some of those that are just, once in a lifetime opportunities, in my opinion. So, and just one example, you mentioned the venture. That's where most of the juniors live. The volume there in September was the lowest in 10 years.
Yeah.
So it's not going to take much volume coming back into the venture to really push these things up. I mean, Michael, we could see doubles and triples of some of these things on nothing, just a change in sentiment. So I think that's where we're at. I wish I knew the timing, but I think that's coming, and that's how I'm positioning myself.
Well, I'm positioning the same way. And one of the things that I worry about, and it's that timing question, is it going to take a crisis to change the sentiment?
Well, when the sentiment changes in gold and gold reaches new all-time highs and it stays there, that is going to draw investors back into this market. They'll go to gold first, and then they'll go to, the majors first, and then they'll eventually reach down to the juniors. That's the typical path that they follow. So I expect that, but it's going to start with a new all-time high in gold that's sustainable.
Yes. And as I say, I'm certainly I'm hoping it's not a crisis that causes that. I think I'm hoping
Right.
it's just
Yeah.
the market sentiment changing to put some of the retail investors back into the gold space,
Hmm.
because a lot of this is being driven by central banks in a lot of ways.
That's a good point about retail investors. They're the ones that are selling for the most part. It's not funds and institutional investors and money managers that are selling these stocks. It's mostly retail investors that's driving down these prices.
Are we going to have to wait to the new year, tax loss selling and all, or we got to the point where I think everyone's kind of unloaded their tax losses now?
Yeah, we're getting there. I mean, this traditionally, November is traditionally tax loss selling month. You know, I I've been making some bids that are way below market to see if anybody will bite, because I don't know that, we're gonna see these prices 6 months from now.
I don't disagree. I had a couple of for people out there, we've referred to them as stink bids, where
Right.
you think, if the price gets this low, I'll actually buy it, but I don't actually expect it to get that low. I actually had a couple of stink bids
Hit.
hit in the summertime, so
Good for you.
I have a couple of good positions and a couple of good juniors
Yeah.
that I didn't actually ever expect to get at that price.
Yeah. Good for you.
But you haven't had any of your stink bids hit yet.
I've had, I think, one, but mine are pretty aggressive because if I already own the stock, I can be a little more stingy. That's kind of the strategy I take. But I think they could very well get hit, this month. So I love it when I get hit, on these extremely low prices that you don't expect to get hit.
Yeah, I did have an economics background in university, and the very first thing I learned in economics was you buy low and sell high, not the other way around.
Right. You buy when there's blood in the streets. And right now, the junior market, I mean, there's not just blood in the streets, the blood is drying up. So the opportunity is going to not be there very much longer, in my view.
Yeah. Historically, the juniors tend to start to make a run towards the end of November, December, and then into the January. For lack of a better term, we call it the fundraising season, where everyone tries to fund their drill programs for the following year. Is that the point of turnaround for these junior stocks,
It
or
could,
are some of these guys still going to be trying to fundraise on low stock prices?
that's a good point. I think it is going to bounce simply because there's a lot of people like us that are buying stink bids. So there's going to be traditionally a bounce because there's a lot of buying, and that does tend to go into January. It depends what the environment is at that time. Again, in the big picture, I think what makes it sustainable for us in this market is going to be a new all-time high in the gold price.
And for people that are looking to find some targets for stink bids, ETFs, the GDX, the GDXJ will likely do a rebalance at the end of December.
Good point. Yeah.
Is there potential targets there for the rebalance that could hit those stink bids?
Oh, absolutely. Yeah. And the thing is, you got to be in and put your stink bid in before that happens. So, tis the season to buy, in my opinion.
Yes. Yes, most definitely. As we move forward, so you're thinking that we're going to start to see a movement upwards into 2024, for not only the commodity but for the actual stocks going in.
I do. I do. I don't expect these prices to last. Just look through history. They never have. There's been some tremendous sell-offs in gold stocks historically. I've documented all of them. But what comes out of those every single time is a huge rebound. And almost every time they not only make up for the loss, but they make a tremendous gain. So you're down 50%, but what if you're up 500% 2 to 3 years from now? That's the kind of thing we're looking at.
Well, this is always a long game, because every once in a while you'll find one that'll take off like a scalded cat, but for the most part, it's a slow climb that these stocks take to get up there.
Yeah,
I'm going to throw you a curveball that we didn't talk about in advance of this
sure.
part, but the last time we had a movement upwards with the stocks, seasonality kind of disappeared. As for those of us
Yeah.
that are aware, these stocks tend to work on an annual cycle. We have a very good period of time through December, January, February, up to the mid to late part of March, sometimes as late as early April. And then the stocks start to correct back downward. And, about end of July, mid-August, that's when they will start to make moves and start to slowly tick back up again as we head back into the fundraising season. The last time we had a kind of a dismal, poor market sentiment area was at around about 2018. And I remember this very vividly because seasonality went out the window. The gold stocks and the gold commodities moved upward throughout that summer, and the seasonality that we would normally expect went out the window that year. Are we in an environment like that again, where seasonality may not be a smart play in 2024?
In 2024, that's good because I wrote an article. It's in your September issue of Prospector Investment News. I said, will September kickstart the next gold bull market? Because September traditionally has been gold's strongest month. That did not play out. What did play out was the, attack on Israel. So seasonality hasn't played out yet so far this year. Tends to play out 2/3 of the time, which means 1/3 of the time seasonality doesn't play out. So there are trends there. We can look at that. They usually play out, but there are times where it doesn't, and it didn't really this year. Again, that's a short-term thing. That the view is seasonality, playing seasonality. The big picture is much more clear. But given what gold is doing and what it feels like it's going to do, and that I think it's going to make a new all-time high in 2024, or maybe even this year. Seasonality would play out in that kind of environment. So I think 2024 is going to be a good year for us, frankly.
I'm in agreement with that, as I say, but it was one of those questions I've been pondering, and I haven't had come to a conclusion in my thought on the market. So I thought I'd ask you when we had the opportunity here. After all, you are the gold advisor.
Right, thank you.
Speaking of being the gold advisor, thank you very much for the fresh copy of your brand new book, Pay Dirt.
Yeah.
Tell us a little bit more about that and how people can get a copy.
It just came out in paperback, so I'm excited to announce that you can buy it in paperback now, not just a digital book online or an ebook, which you can also get, in Kindle. So I've been passing them out like candy here at the conference. So it was a 2.5-year journey to get through that. But I will say it's a entertaining read. It's fun. It's simple and straightforward. There's 16 other people that are in it from the industry that I interviewed that give very clear advice. They don't waver on what they think you should do to look for in a potential mining stock. Very clear. So you can read this book and get very clear advice on what to do. So and now you can get it in paperback on Amazon, or the link is also on our site at thegoldadvisor.com/paydirt.
Well, you signed my copy of the book, so that makes my piece of candy a little bit sweeter than
Yeah,
other people's.
right. Yeah.
If they want to follow your work and get in touch with you, how would they do so, Jeff?
Yeah, it's all at thegoldadvisor.com now. I'm there all the time. That's my baby now. So we write 90% of our time is spent on mining stocks, and all you have to do to view the portfolio and our recommended stocks is sign up for the newsletter. You'll be pinged to do that once you try to look at the portfolio.
I appreciate that. I visit that site regularly, and there's always good advice for people. Thanks very much for joining me, and I look forward to the next time we could be sitting across from each other doing this, but in the meantime, there's always Zoom.
You got it. Thanks for having me, Michael, and I'll look forward to the next time too. Shouldn't be too long.
No, it shouldn't be. The year's wrapping up here pretty fast.
And then we have the Vancouver resource investment, so that'll be fun.
Yeah, just booked my hotel for Vancouver. For those are in the Vancouver area, that's a good time of the year to be in Vancouver. If you've got interest in this, there's literally 3 shows back to back to back, starting with the Metals Investor Forum, followed up by the Vancouver Resource Investment Conference, which is the big daddy of everything. And then if you want to get down into to kicking rocks with the geologists, the Association of Mineral Exploration holds their annual roundup right after that. So there's you get a good dose of rocks and stocks over a period of a week in Vancouver.
Yeah, I love the Vancouver conference. It's fun. Lots of companies are there, mostly focused on juniors. So it's a great time. It's a fun time. It's a productive time. So hey, I hope to see some of your listeners there.
I look forward to seeing you there. And yeah, the listeners should come stop by if they see Jeff. Kiss up, buy a book, and maybe he'll sweeten it with a signature for you.
Yeah. Thank you, Michael.
Take care.
Bye.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.